Hey everyone, this is Renee, your wealth coach. I have a special guest with us today. Let me get us in the frame there. This is Derrick. I get to do life with him at Ohio Credit Union, and he's my go-to person. And so I'm excited I get to interview him today. And so, Derrick, introduce yourself.
Well, thank you for having me. My name is Derrick Bailey. I'm the Chief Sales Officer at Ohio Credit Union. I oversee our commercial lending areas in every lending area, but we're going to talk about small business lending today and the impact on the community and things that we could do to continue to serve.
Private meeting.
Sorry, you guys. We're at the Hilton Hotel up at Easton, and we're here for the weekend. And so we're in the lobby, and so you're going to hear music, you're going to hear background conversation, but we're going to hopefully answer your questions. So, Derrick, in this group, I like to provide people with resources, education. We were just talking about that. And so, for someone that is just now brand new, wanting to start a small business, how would they qualify, or what are you looking for when they come to Ohio to get a small business loan?
So startup financing for small businesses can be challenging. It can be stressful for the entrepreneur, and it can be a challenge to a lending institution. But here's a couple steps that you should take when you're thinking about contacting any financial institution for lending. Number one, make sure that you have your partners in order. And by partners, I mean your trusted advisor as far as an attorney, tax advisor, have a good business plan. I always advise new entrepreneurs to utilize mentorship. So reaching out to entrepreneurs that have done what you're looking to do in the past, or who can provide you guidance. But when you come to the financial institution, there's a couple key things that we're going to want to see. We're going to want to see a business plan. The business plan itself doesn't have to be that long, so don't spend too much time trying to just fill the page with words. What we want to see is your overall strategic vision. We want to see how you plan to capture and drive revenue, and then we want to see how that revenue turns to the bottom line. So in addition to a business plan, what you want to provide is a pro forma. So a financial outlook over the next 36 months. For the first 18 months of the start of your business, you want to do your pro forma and your projections monthly. So for the first 18 months, do monthly. You could do the final 6 months, or from 18 to 24 all together, or you could go and just go from 1 through 18, and then from 18, this is how we're going to be at year 2, and then from year 3. You definitely want to break, and the reason why you want to break it down monthly, the majority of the lenders have a hurdle. They want to make sure that the property is viable after month 18. So it used to be where you could do monthly for the first 12 months, but nowadays we know that it takes a little longer than 12 months to get your business into an ecosystem. So at the end of month 18, run a true pro forma, meaning this is what you truly think that you could do. And at the month 18, if you're at break even, you probably have a solid pro forma that you could take to a financial institution. Remember to include any potential loan debt in that number. So if you take out a startup loan, remember to include that. Include any type of expense, and give yourself a little bit of cushion for the things that may not take place and go as well as you thought. In addition to having a sound business plan for your business, when you're doing a startup, a lot of the financial decisions for a startup are based on you personally. I tell people every year you should be preparing a personal financial statement. And with a PFS, you're going to list all of your assets, you're going to list your liabilities, you're going to list contingent liabilities. If you co-sign on a car for someone, or you have a potential liability that doesn't show your credit report right now, you need to list that out. You need to list whether you have a will, any judgments, and answer them honestly. You don't want to answer no to bankruptcy because it was over 7 years ago. lenders will see it. No matter if it was 7 years ago or 30 years ago, the data's out there. Just answer yes, provide a letter of explanation. So work on your personal financial statement. That is very important. You want to see what type of assets that you have that can help support your small business.
Awesome. One of the things that we do here is that have an online course where you start with the business plan.
Yeah.
So I'm glad that you mentioned that. So this is a great start for you. And those that are watching live and for those that are watching the replay, please ask your questions, comment below, and we'll get answers for you. But that is so key. So now let's move to someone that's already in business and they need money to grow their business.
Yep. And this is where sound financial statements. Remember, at the startup, I said, hey, make sure that you have a CPA. We want to see the last 3 years of financials. So last 3 years of personal tax returns, business tax returns, as well as your interim financials. So your year-to-date profit and loss statement and balance sheet. And that's really what we want to see. When you're already established as a business, even though you may have to personally guarantee the loan, and 95% of the time, banks or credit unions will ask for your personal guarantee. It's really about underwriting the business at that point. So once you're established, getting capital is a little easier. You just want to make sure that you go to the right institution. In theory, you should go to the institution that you have your deposits with. And if your institution that you have your deposits with is not willing to make you a loan, and you're showing good profit, and they say something like, well, you had a late payment in 2018, you should think about who you're depositing with. I always advise small business owners establish that deposit relationship. For example, at Ohio, we're not just going to help you as a business. We're going to help your employees with financial literacy. We're going to help you, and we're going to connect you with different business people. If you want to start a business in a community, you need to contact with an economic developer. We're going to give you those type of contacts to help you be successful. That's the difference between a member-owned cooperative and a for-profit financial institution. Another thing that I would say is really, really important, even though you're past the startup phase, let us know where you want to go. If you want to borrow $500,000, show us on paper through a pro forma. By lending this $500,000, this is how much we're going to make. That's planning, that's budgeting. Never stop doing that. Your business plan should always keep continually evolving and optimizing. Check off the one milestone, add another one, and add another.
I'm telling you, relationship is so important, and I still go into the bank where they know me by name. So if I do have an issue or a problem or a question, I get my answers. And so that's one thing that I like about Derrick, because I can come to him, I can ask him about crypto, I can ask him about silver and gold, I can ask, he's just a resource of information. And so, and then he could say, that's what I like, because of the small business side, is that you go in there and you don't have to give, that's going above and beyond with your service. And so, that's so key. So I definitely appreciate the relationship building part of it. Now, there are some investors in here. We do buy rental property, commercial properties. So let's talk a little bit about that funding. So I'll just use myself for an example. My next project, I want to get a commercial property. I want to get 10 units. So how do I get started?
Perfect. So with commercial investing, again, you need your PFS. What a lender wants to see is after you make your down payment, and typically that's 25% equity injected to a deal, that you have a little bit of liquidity to handle payments just in case something comes up. But it's really, again, about the property. So this is where it changes. Sometimes I hear investors talk about their business. This is my investment business. I'm going to get my LLC. Well, those are just holding companies. We're looking at the property. So you mentioned a 10 unit. With a 10 unit multifamily property, we're looking at a couple things. We're going to analyze the cap rate, and the cap rate is the capitalization rate. That's the rate of return investors expect to get. So we'll analyze that property that you're looking to purchase to see if you're purchasing that property at a fair capitalization rate. We'll analyze the vacancy rate. You know, is 8 out of the 10 units vacant? Well, that's going to be tougher to finance versus 8 out of the 10 units that are occupied. We'll look at absorption. Absorption is how quick a property becomes occupied. That's a very important rate. And these are trends that you can find. So real estate data is actually public. And again, through relationship with your bankers, if you have a really good relationship with your banker, you can send them a property. Now, they can't tell you yes, I will buy it, but they can give you the market data. And that's based on relationship. Other commercial real estate, let's say if you want to buy a property with business tenants, so like a retail center, again, we're going to look at the leases. We want to see sound leases. We want to see that the leases also have SNDA language, which is a subordination, non-disturbance, and atonement. And that language is important. If you ever have a commercial tenant, you want to have your real estate attorney write you a really good lease because you want SNDA language. Without that language, if you ever sell the property to someone else, in theory, they could exit the lease. So the language basically says we're all going to agree on this lease no matter who's the owner. So that makes your lease stronger. The property management company that you utilize, sometimes think about not doing it yourself. You know, yes, you can save 6%, but you're truly not saving anything. You're creating a job when investment real estate is truly passive income. It's not supposed to be your day-to-day job. Even if you do it as a retail investor, you want your properties, you want mailbox money, right? You don't want to spend too much of your time doing that. You want to focus on what got you there to be able to invest in commercial real estate.
Awesome. On that note, and this is again relationship to where I would go beyond to say, okay, where is the money? They're talking about a crash is coming. The housing, the mortgages, you know, the prices are high, rentals are high. You know, where does that leave us in the future?
Yeah. So, you know, there's a lot of uncertainty. And the reason why you really want to diversify your portfolios right now is to hedge against uncertainty. You know, some people like stock as a capital asset or bonds. Some people are 100% in real estate. Some people like precious metals, which is always a great hedge in uncertain times because precious metals is there's always a value. It can't be zero, right, with a precious metal. I think it's important to diversify to your risk appetite and to what type of return that you want. You need to pay attention to it. What I would be careful of personally in a market like this is not being too conservative. Still look to invest. Think about the factors of the whole entire economic system. People are talking about inflation. Well, we know there was a ton of money pumped into the economy. But another aspect of dollars staying within the community or within the regions is increasing because we are reshoring. COVID taught us one thing. We can't make everything across the seas. We have to manufacture more, and that's what we're starting to see. In the Columbus market, it's a wonderful market, right? So Columbus is becoming this mix of service, manufacturing, tech, venture capitalists. It's a really, really strong market. Doesn't mean that it can't turn around and things get really bad, but don't be afraid to continue to take risks, educated and calculated risks, and bet on yourself. And back to commercial real estate. And then when you think about commercial real estate, just think about another thing. There's probably 9 major asset classes of commercial real estate. So that's from office, industrial flex. Industrial is one of the strongest markets right now for commercial real estate. So Columbus, we all know there's not enough housing, but there's not enough small industrial spaces as well. You get your major industrial spaces out in Rickenbacker, right? The 1 million square foot type of facilities, 2 million square feet. There's not enough 100,000, 50,000 square feet spaces for your flex entrepreneurs, for that plumber or for that small distributor that needs about 20, 50,000 square feet versus 100,000 square feet. So that's an opportunity, right? So maybe you have land that could be zoned for flex. Well, you could probably make a good dollar doing that right now. So just look at it this way. Another thing, don't be afraid to diversify your risk in partnering with the right people. You don't always have to have 100% of equity of the whole project. Maybe you partner with like-minded investors and have proper terms. Make sure you have your operating agreements in writing, no handshake deals. But that gives you more power. That gives you leverage to take advantage of the market.
So I'm taking notes, and I will have to watch the replay myself. That's good information, and so we're going to just roll into the precious metals, seeing that you mentioned it, and how that truly hedges. Now, how do you buy gold and silver, or?
I buy gold, silver, palladium. So it's an ultimate hedge against the uncertain times, right? Back biblical times, right? The silver, gold, all of that stuff has always been mentioned because here's the fact of the matter. Every fiat currency in the history of the world has failed. Think about that. Every single fiat currency, every paper currency issued has failed. So you want to have a little bit of your portfolio, whatever you're comfortable with, just as a safe haven. And that's my opinion. You definitely want to talk to your financial advisors. This is just my personal opinion on that I will have a little bit as a safe haven. Second reason, I talk to people a lot. They're like, man, I wish investing was fun. Stocks are not tangible, right? Real estate, it takes larger equity investment, right? But I would challenge you with this. Say if you have a 18-year-old kid and you're trying to teach them about saving. And we all start small, right? Maybe it's $100 a month, maybe it's $50 a month, I don't know. But say, okay, put $50 in your savings account, buy 1 silver ounce of corn, just 1 per month. It might cost you about $30 right now, depending on the type of corn that you buy. And the difference between the checking account and the physical, for someone that's trying to save, to be able to physically touch it and see it, it will use the mindset of a consumer that spends. They're spending money in their mind, but in fact they're building their wealth and saving. It's psychology, right? Because I get to buy something. A lot of times people just want to buy something. We'll go to a local coin shop, pick up a nice coin. You could buy bullion, that's just silver graded just for investment purposes. Or you could buy numismatic coins where you get the additional value based on what it's worth. And that's up to you. You could do that with a lot of other assets as well. But precious metals is typically one of those asset classes that you do that with. That's why you see the grandparent may buy a Disney stock certificate and have the physical certificate in a plaque. Because they know that when you're young, you need to see it, you need to touch it, you need to feel it, right? As you're older, you're more mature, you understand, you don't need the tangible part of it. Or if you're older and you just like to buy stuff, just go to a coin shop and buy it. The other aspect of investing in precious metals, the uncertainty of economic systems. Plus, it's a global investment, meaning it's the same everywhere. It's equal, right? Second, everyone hears about chips and semiconductors. Well, you need silver for all of that stuff. So just think about it. So what is truly the value of silver and truly the opportunity and where it could really raise. But do your research, make a decision based on you, and dive into whatever you do. Dive slowly. Don't go too quick.
And I just started stacking.
Mm-hmm.
It's a thing.
Stacking.
So,
yep.
And then you never know. I didn't know that you collected coins until one day I heard you talking. And so once you get into it, so my goal this year is to get up to 100 ounces. Mm-hmm. So I might buy 3 or 4 coins. And right now the price is down, so I'm able to So by the end of the year, my goal is to have 100 ounces. And then I was thinking, well, you know how we say to have 3 to 6 months of savings. Well, you could also do it in silver and gold, and so that's another way. And then I'm thinking about, you know, I've been talking to the group like, hey, let's start purchase coins. So I'm learning. I'm new at it. So to know the difference that there are bullions and what do you say, nomadic coins, exotic coins. Now, which one is this?
So that's like a coin that has value based on that coin.
But I mean, which coin is that?
It could be anything. It could be a penny that has an error on it, so it's all of a sudden worth $1 million because it's hard to get. So those are the ones that you see at coin shows. People wearing white gloves, don't touch them because they'll mess up the
I have white gloves because I was doing a video, and I, you know, because I'm gonna load this up on YouTube afterwards. This is Facebook. And a guy was like, I was showing my $1 coin that was worth money. So he was like, nice coin. He said, but where's your white gloves?
Where's your white gloves? Yeah.
So you learn as you go along.
Because the acid for your hands, even your, you know, even your silver rounds. Some people, you know, they want them to look nice, and I don't really care. I just like the net value for those. But you know, there's some people that always wear white gloves for those. And that's just collecting as a hobby. You could go to, you know, a popular coin shop in town is Allen's, right? Allen's will have whatever you're looking for. They've been selling coins forever. And just recently, the state of Ohio no longer taxed the sale of bullion. So if you want to buy a 10-ounce bar, they used to have sales tax unless you had a sales tax exemption on file, but now that's no longer taxed, which helps you out a lot. You know, that's going to save that sales tax rate. You can leverage your physical silver as well. So instead of selling it, you can actually send it to a third-party companies out there, and if you want to have a loan, they can take a loan on it. Banks will take it as collateral as well now. Certain banks will. It all depends on what banks you're dealing with. So it's an asset. It's a true asset. Now, is it as convenient and easy to move? No, if you hold it physically. Now, you can hold it in the vault as well. There's exchange-traded funds. Personally, I don't recommend them because the verification of the amount that they have is kind of hard to verify. I mean, you have to truly have a lot of trust. Do your research if you get into anything like that. But ultimately, I just enjoy it. I think there's history with coins, and you can learn a lot from history.
Wow. I am so excited, and thank you so much for the information. These gems are priceless. And Derrick, I am going to wrap it up because, you know, we could talk for hours about this. But any parting words, any questions that I didn't ask that you think would be important to everyone? And then I'll just end it too. Like I talked to Chad yesterday. So I could put my real estate, my silver and gold. I wrote a book. I don't know if you know. I authored a book. I'm like, all this, because I'm generational. And I'm trying to, you know, continue the remaining legacy. And so I'm excited.
So you need trust services.
I need trust services.
So that's trust services. Yeah, trust services, very important. Very important. Protect your wealth, protect your assets from liability. You know, we definitely could get an expert. Chad Mays is an expert with trust services. He's really, really has a sound understanding of fiduciary trust and how to protect your assets. But that's another thing you think about, right? And think it's no different than when you set up your business, right? I want to be a corporation, a LLC. You're doing it to separate liability. When you buy investment real estate, you're usually putting in an LLC. You're doing a separate LLC for each property. You're doing it to protect, to limit your liability. So there's a lot of different avenues you can do that. Plus with trust. So for your little ones out there, when you're ready to leave your legacy to them, you can put spendthrift clauses on there where they don't get everything at once. And they might have to meet certain things. Maybe you want them to have a 4-year degree. That's how you can still control your kid from the grave. And maybe you want them to get a little bit at 35 and 40. You know, your family, and get a good trust attorney when you establish one. That is most important. very, very important to make sure that you're dealing with the proper person. You don't want to do the online trust and all that other stuff. In my opinion, it's worth the spend, and it's usually a one-time investment with some small investments for updates. That's all.
I was concerned that instead of selling grandma's house, it's really worth $1 million, but we sell it for pennies on the dollar. So stop selling grandma's house. But my daughter, I only have one daughter, and she's very bright, and she's gonna do well after I'm gone. But she's like, "Oh, this is your thing." I'm saying to myself, like, why would I build? Why am I building? I'm working myself to build this, and you're just gonna sell it off for nothing. So that's what I like about the trust.
Put that in trust, and with no, you can't sell the asset unless it's an emergency and you have to sell it. Those type of clauses you could do it. You could be really, really creative, and what will happen? You'll see like someone, they may inherit the trust at a younger age, and they may be ready to go to Vegas and go to Miami and spend all the money, and they will be disappointed. But when they mature and they look back, they'll thank you for it. They'll say, "Thank God I had someone that understood," whether it was an uncle, a grandparent, a parent that understood the value and the importance to protect me financially. We don't see it enough of, in certain communities, in our community, which, traditionally we were better at protecting the family assets, right? We wouldn't just sell our house. And we've all seen what happened in Columbus, a lot of areas that homes were sold for well under 100,000, well under 50,000, and now they're over 500,000. So, just think about it. Remember, patience is key. You don't need instant gratification all the time. Slow and steady.
What's your favorite quote? And we'll end on that quote.
Oh, favorite quote. I don't really have a favorite quote. I'm not a quote guy. I'm not a quote guy. But I would say this. I think my favorite saying is always improve. Just continuous improvement. Just get better. If you're at this level, just slowly. Just don't stop. I think that's important. And no matter what you're doing in life, just try to always get better.
You guys, again, feel free to ask questions. I finally caught up to Derrick. I see him once a month, but he's just anything I can go to him. He's right here in Columbus, Ohio. And although we're branching out, so how can people get in touch with you?
So through LinkedIn, you can reach me. My email is dbailey@telhio.org, telhio.org. I'll give you my direct phone number to the office, 614-222-6232. Feel free to reach out. I may have to introduce you to some different teammates, but I'm always available as well anytime time permits. And just give Telhio an opportunity. It's really one of the best financial institutions in the nation, in my opinion. A lot of people don't know what we truly do. And if I told you that we do more small business lending, do more SBA lending last year than Chase, you probably would say no way. But in the Columbus, Ohio market, we did more SBA loans than JP Morgan Chase. So just think about that and what impact that we're trying to make.
Awesome, and it's true. He's taken our credit union to levels. We didn't offer SBA loans before you got here, so I'm telling you, you guys reach out. And I always tell you guys, if it's something I don't know, I know people.